So let's get started. We have no news on the calendar from what I saw earlier. Right, we have nothing here to worry about. We have pending trades from a couple days ago, or I have pending trades from a couple days ago. On the bigger scheme of things, let's go all the way back up. On the monthly, like we talked about yesterday, we did make a higher high in the last 11 days of the new month. And we have now, I think, found the low for the month of June. And we're testing this as we speak, right? This is the month of June, 11 days old, and we're testing the low. If we go and look at it on the weekly, we still have to deal with this gap. Right? 61% is right here. If we do go slightly lower, it's not going to the South Pole, right? There's a ton of support below us, right? So on the daily, today compared to yesterday, we have a slightly lower low. We have a slightly lower high. We have fulfilled the average daily range, or we're within, a pip or so. I would suspect we have a bounce from here. Right. So when we look at this intraday, the last 16 hours or so, all we've done is find the low. Now that we have found it and we have 8 hours left to finish 24 hours, there's nothing that says we can't bounce from here. Right. So let's highlight this as a floor. Let's highlight the other end as a ceiling. And then within this range, we're going to go and find the ladder that we trade within. And then I'm just going to go to the 1 minute chart there for a minute. All right. So within here, we have the ladder. Just highlight the ladder right away so that we can go to the 1 minute chart and deal with stuff there. So I'm looking with just with my mind's eye. I'm picking off these shelves, these levels that I see that look attractive, right? They were useful to the price once before. They may be useful to the price again. And so we just suspect that in this zone here, right, in this zone here, we may have a break or a bounce, right? In this area, we may have a bounce or a break. We repeat this train of thought all the way through. Right, so we created this ladder. If I remove the fib that's on here, because I don't really need it anymore, go to the higher time frame. But just remove this and I deal with my ladder. We have an idea. We can assume there's another one here, maybe another one there, right? I'm just using my mind's eye to gauge where the next ones might be. I could be off, a quarter inch either way, half a centimeter. I don't, it's not an accuracy game, right? It's just a call to action and a decision-making process. All right. And then on my 1 minute chart with the boxes, right, I'll take one, make sure it's the same size, double check. Oops. I have been reusing the same boxes, so I just want to double check. A little bit too big. Right. We need it to be 60 by 9. All right, that's still a little bit too big. It doesn't have to be perfect, right? So just close enough is good enough, but you don't want it to be miles off. Right? So this is more like it. That's what's been bugging me. use this here. I'm trying to pick off the low, and then we can see how we kind of moved over once, and now we're falling once, and we're testing this bottom, right? This is that level, that Fibonacci that 61% Fibonacci. This is it here. We've been approaching it. And when I woke up this morning, right around 5 o'clock, right there, about 3 minutes after I walked up to my computer, the hedge triggered. And because I realized the ADR was already fulfilled, I closed it. Right. So that's the hedge that had been in place to protect this. Right. So I'm still trading currently while carrying drawdown from 2 days ago. Right. So we made money yesterday. Right? We made money yesterday. We're making money today. And all the while, I'm carrying a float from last Friday. Right? And if I look, that float is about 7% of my 14,000. It's still climbing, right? It's still climbing, even though if you look here, my equity is in drawdown. It's hard to see because the box is in the way, but you can see here, the green line is at the bottom of the gray band. Right up here, the green line is at the bottom of the gray band. I'm trying to get the green line and the gray band back up. Right. So if we go down here and look at just yesterday we had winning trades. We added about $60 to the account. Right. We want to keep doing this while we're in drawdown. Right. There's nothing stopping us from making money. Right. This is not going to the South Pole. It's not going to the moon. And because this is not a prop account, I can do whatever I want with the drawdown. Right. And look at this here. Right. Per trade. So every click that I take, the worst is 1% of drawdown. And this is per click. So I'm not too concerned. It's a game of averages. If you're still looking for that accuracy, that perfection, you're chasing your own tail. You know, start with something that's 70% good enough, and then work to make that 30% better and better and better. Right. This is all we got to a 98% win rate. Right. We're just looking to see if we bounce off that 61%. The average true range indicator, yeah, I use the default setting. So basically we're looking back 14 minutes in this case on my 1 minute chart. Right. So we're looking back 14 minutes. We're averaging those 14 minutes to see what is the average candle. Right. In this case, it's 2 pips on the 1 minute. When you do the same method, the same calculation on the daily, so the ATR on the daily is equivalent to an average daily range. And here we're looking at the average of the last 14 days. And it tells us the last 14 days on average are 57 pips. And because I trade at the same time every day, I tend to pick up on increasing ATR, right? This 8 o'clock time frame that I target, as my start time, it enables me to have bars that are usually getting bigger in size, right? Things are increasing. It's easier for me to make 3 pips. Right? I don't want to be trading when the ATR is like this and there's no money to be made. Right? This is how we get stuck holding on to trades and we can't get out. And then when you trade at 8 a.m., all of a sudden the bars are bigger and now you're making money. You're in and out in minutes. It's a different ball game depending on the time of day. And the ATR allows you to see, it's like a speedometer. It allows you to see the speed of what's happening. I match that up with that tick strike, the noise that you hear sometimes, that noise. And it kind of coincides with the volume that's coming through, right? That tick is not mini lots and micro lots. Yeah, it's like a speedometer or the RPM in your engine. And you want to be trading when the RPM is increasing. See here, this is going up and the size of the bars are increasing. Right? Big, huge bars here. Right? So having a target of 3 pips is usually based on a specific time of day. And at that specific time of day, it's usually right after a piece of news that we have at my start time. So when there's news at this start time, when I react to the news, I'm reacting to 3 pips or bigger. And it becomes really easy to make 3 pips like this. Boom, 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 in and out, in and out, in and out. Right? It's almost like guaranteeing my exit if I'm trading while the ATR is increasing. And this is why we also aim to be finished at a specific time of day, because we then know that the ATR will start to shrink and it becomes impossible to get out or improbable. All right, so we're bouncing off of 61. We want to be buying the bottom of red candles like I just did here. All right, so that's trade number 1 as a group. All right, let's go back to our 5-minute chart. Let's see what the ATR looks like on the 5-minute chart. All right, increasing. The bars have been getting bigger and bigger. All right. Compared to the Asia session, where the bars are small. It's the only tool you need, literally. It tells you if it's worth trading or if it's worth walking away. And if you do this with futures, let's see, yeah, my platform is running. When I do this with futures, I'm counting ticks. And that gives me a pretty good idea if I can even make my target. Right? That kind of stuff. We could throw an RSI on here and look for overbought and oversold conditions. And then you'd have to tune the RSI to match with your trading conditions. You can't just leave it there with the default settings. All right, so if I move this to the most recent low down here, and now let's assume we're about to break out of this box. Bum, 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 bum. if I had lost my conviction in that 1.1 target, if I'd lost my conviction in going up here, I would not be carrying this stuff. Or actually, let's turn that back on. Viewing option positions, right? If I had lost my conviction in the ability to the euro to find its way back up, I would not be hedging my way while carrying this drawdown. I would rather just book the loss and move on. But I suspect I'm right in the end. And so 7% is not something I can really freak over. I can manage this. That's the logic, anyways. I'll just take away the position so I have a clearer picture. I think when those upper trades are in drawdown closer to like 10% or so, then I start to really panic. Because I'm still making money while carrying this loan that I made to myself. It's not a bad loan yet. Okay, so I'm just recycling the trade that closed here 3 minutes ago. Okay. Like we said yesterday, the market has the ability to scrape the bottom of the barrel before it goes back up. And this is what we were talking about when we were up here. I said, create a plan in case we don't fill the gap. We could be visiting 7s and even 680s, 690s. And that happens to be our next stop, 36 pips away. If we fail to bounce here, right? The next 4 boxes entitle us to a move down to 680, right? So if we're willing to participate, ultimately, I'm still looking for this. Right there. We're still inside that big wedge, that huge wedge triangle. And Dixie, if we go take a peek at our daily, Dixie, we're, as we speak, testing resistance, yields, also looking like they want to roll over. This is what we're now trying to survive. And just create a plan, know when too much is too much. If you're trading a prop account, they tell you where too much is too much. And so you have to adjust everything to fit that model. If this is your own monies or your own demo account or whatever it is you're doing, you have a lot more freedom, right? It's okay to make mistakes. It's okay to learn how to fix them. That's kind of the key. Right? We're just trying to figure out if we're going to bounce, and if so, where, how much, how far, and can we just keep recycling our trades? That's kind of what I built my position for. I was at my computer doing other stuff right up to the last minute. Now here we are building, or expecting to get paid out, should I say. In the case of this group session, we're hoping to be recycling the trades and not build drawdown. All right, we're buying support right there. If you can do it on the red candle, that's awesome. Right, so now I think as a group, we've got about 2 or 3 trades going. And the ability and the willingness to open a few more. We're always buying at support, or trying to, at least. That's the model. That's the goal, right? We do the best we can. It's not a game of precision. Well, it kind of is, but it isn't. You want to be in the ballpark, and then just do the best you can in the ballpark. Right? So buying off support failed. So now we're testing the next layer, the next level of support. And if you have a couple of clicks left, maybe that's where you put one, right? On a red candle at support, and almost immediately, soup, right? If the bar is worth 3 pips, that would have made us money just by picking off the bottom of the bar. We don't want to be caught chasing stuff. That's what 95% of the people do, right? They see red, 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 and they say, oh my God, it's falling. I have to sell. And they're not looking left. They're not realizing that selling into support only forces you to get mad at yourself in a few minutes, because the probability is it's a bounce, not a break. Right? So we are training ourselves to anticipate a bounce and not a break. I'm sure at some point you've told yourself, I wish I could buy instead of, when I'm thinking I need to sell, I should buy. When I'm thinking I need to buy, I should sell. This has crossed every trader's mind at some point. Right? It's like you're expecting to do the right thing, but you end up doing the wrong thing. This is exactly why, right? Because we're chasing what's happening just before it turns around. Right? So by anticipating what is average, what is normal, by measuring the past, you can realize, whoa, jumping in right now is the wrong thing to do. Right? So you can actually do the opposite because you're aware of where you're coming from. Right? This box is just an average move. Inside the box, I can make average money because the bars are themselves average. Once I break the perimeter of the box, the game changes. The behavior changes, everything changes. It's all about picking off support and picking off resistance. That's where the money is. And you can do that on any time frame. I'm just teaching you this on the 1 minute because we only have an hour together or thereabouts. Right? Anybody that's chasing is chasing into a brick wall. Right? They're chasing into support or chasing into resistance. The probability of the break is the lower probability. And so you and I end up fixing breakouts instead of chasing breakouts. I'm just gonna leave it at that. Let's see if we can bounce a couple of boxes from here. That'd be sweet. Leave a nice little wick on the daily candle. And we leave a wick on here. Something like this. We could go further. We've already fulfilled the average, more or less. In the grand scheme of things, this is where we should start, every month, every new month, every quarter. Go take a look and see what this is showing. Then you work your way down. On weekends, go take a look at the weekly chart. Create all these plans. What if? And then we end up trading the facts on the 5-minute chart, asking what if at every one of these levels. Is it bouncing? I'll take a trade. That'll be the fourth one, I think, in that box. 1, 2, 3, 4. Yeah. So now if we drop lower, I'm allowed 3 more boxes to catch a break even with this. All right, so those of you following along, right, if we go lower, we're allowed 3 more boxes to average with this box number 1. And ultimately, we find a bounce before we find the ejection seat. Right? It's spreading the risk evenly. That's one of the main objectives. We don't want to pile it all up into one little corner. That's kind of what swing trading is. Call me crazy. Bottom of the hour, perfect timing. Right, so right around here, we would expect the bars to turn around. Sorry, the average size bars to start to increase. It's been about 30 minutes or so. Yeah, my break even is way up here because I'm carrying Friday's trades. Right. With this C Trader platform, it's an indicator right there. If you're using the web version of C Trader, I don't think that break even tool is there. It's not available on the web version of C Trader. Let's go, let's go, let's go. Let's check the ladder. This looks beautiful. I like it. Let's go. Let's have a break. And we've tested the level multiple times. Let's see if we can break or bounce. One decision at a time, and then try to make 3 pips within there somewhere. If you're using MT4, MT5, meta quotes, you can get break-even tools from the market for free. Average position is also in the market for free. You don't really need anything else. It saves you from doing the calculations manually. If you traded this methodology on a much higher time frame, for example, an hourly chart or a 4-hour chart, you have enough time to do the math on pen and paper. It's not that critical. It's because we're doing this on the 1-minute chart. It's exciting, it's fun, it's pleasurable. But you can replicate these efforts on the much higher time frame and go gardening. Fractal by nature. 1 + 1 is 3. All right, we recycle here. It's a red candle. I'd like it to go slightly deeper, make us a little bit more money in the process. A little bit more. Yeah, if I'm in box 4, it's because I am averaging the 4 boxes. Therefore, you're looking to break even. You should be closing box 1 if you know the first chance you get. Get out at break even. Just 1, 2, 3, 4. I bought the bottom of that red candle right here. Yeah, right there. I'm waiting for this to turn around. This to turn around. That may come in line with our timely events. The London fix is up next. One, two, three, four. The waiting is the hardest part. You hear me say this every day. This is why it's so quiet. I had them turned off. We have really nothing on the schedule. There's a speech at the top of the hour, or a speaker that may or may not influence what we're doing, but we'll see. I don't have to cover a 7% loss because it's not a loss. It's in drawdown. And so I'm just floating it along while I continue to make money. Right? If it gets to 10%, I close everything. The whole shebang gets discarded. I can't take it anymore, but it's not there. And I'm still adamant we're testing higher, right? So I'm willing to float. It's like lending yourself money. Right? I'm lending myself 3%. And you could do it with transferring money from one account to the other. Right? You could do that. There's a million different ways to balance this book that you're in control of. Right? You're when you're trading for a prop account, you have to play by their rules. If you're trading your own monies or you're testing your own strategies, test the envelope, right? Push the edges, see what you can get away with, document all this stuff, and then at the same time, reduce everything by half so that you don't get into trouble. Right? But you have to understand where the limits of the strategies are. Right? This is how I found out I could get away with 4 boxes, but not 5. Right? And then because I'm adamant in my bigger picture, I'm willing to float a little bit of money while I continue to make a little bit of money. And if I'm wrong in the end, I lose everything. But if I'm right in the end, I've made money while floating a little bit. Right? These trades that are up at the top, they're not losers. These are not losers. That's the definition of drawdown, right? There's still work in progress. Right? So yeah, it sounds like we're getting away with the technicality, right? But in reality, it's mathematics. It's just an averaging game, and I'm in control of where the average is. I choose to expand how much I'm taking on. It's nothing excessive. Some swing trades are 2 or 3% per trade, and some swing traders will have 6 or 7 of these trades. running at the same time. They're in drawdown 50% of their portfolio. Right? It's madness. Right? It's okay to test the limits, but you have to create alternatives. You have to create strategies. You have to know when enough is enough. Right? Because at some point it is critical, right? But unless it's critical, it's normal. It's to be, it's like you're working in an emergency room. Not everything is an emergency. So yeah, I'm still responsible for these, and I continue to make money. If we look at it this way, oops, it opened over there. Sorry. Let's look at it on an hourly. Right. So we're making money pretty much every day. Right. This is what's in drawdown. I continue to make money, and I know where to quit. Right. I know where to pull the plug on this stuff. It's because I am adamant we're coming back up to retest. Let's put a line there and lock it in. I'm adamant we're coming back to retest up here. So we'll see how long it takes. It's about a month away. It's less than a month. We can do that in a week. We can do that we could do that tomorrow. The critical aspect is the downside. I have to know when to pull the plug on these. When is my entire thesis wrong? These are 4 boxes of trades. These are 4 boxes worth of trades. It's 1 day of work that I'm carrying along. So I've been carrying 1 day for the last 3 days or 2 days. It's just drawdown. Don't confuse drawdown with loss. Loss is after you closed the trade. Right? That money's gone. Let's go back to the 1 minute. I need to see what's going on here. There's a buying opportunity. Okay. Since we only have 2 trades in the current box, what you don't want to do is exceed something in the order of like 2. Oh, where's my other chart? Shit. Put it on the left. What you don't want to do right there, you don't want your max drawdown per trade, per click, each click. You don't want the clicks to exceed 2%. Right? You can control the number of clicks, I'm sure. Right? This is where the critical aspect comes in, right? Maximum balance drawdown per click. And this is why we spread it. You don't put it all at once like a swing trader, right? So I'm controlling this by floating half of it. Yeah. When push comes to shove, you know, you you create these uh what's the word? It's not a recipe. It's like a step, a checklist. You create a bunch of uh prefabricated plans. You know, like one way to look at it, if you were a machine, uh one way to see if I can find this file. A friend of mine gave me this file a while ago, and it opened my eyes into how a computer might be able to look at the market, and how I can look at it more like a machine, like remove some of the variability that comes, with the human brain. The idea behind the box is to help me filter some of the information, right? And this here, if I can open it, there it comes. Right there's a way. Oh, it's opening on my other computer. There's a way we can. There's a way we can label stuff, and we can measure things. We can see it evolving, and as it's evolving, it's changing the overall picture, and eventually it qualifies and it triggers. There's a chain of event unfolding, and that chain of event leads to something, which leads to something, which leads to something. And in our brain, we're training to think one move ahead. While in my brain, when I'm doing something like this, it's because I have this move in my mind. Right. So if I'm surviving this right here, it's because I'm willing to do this next. It's understanding where enough is enough. Where can you not take it anymore? Right? When can you just not afford this? When are you absolutely wrong? When is the whole idea flawed? Right? There's limits, and each time frame has opportunities. Right? So it's understanding that it evolves, and sometimes you have the plan already figured out. Plan B goes into plan C, which goes back into plan A, which now switches to plan D. Right? It's You have to have all these alternatives figured out. Right? It's a range within a range within a range within a range. I'm teaching you how to use 36 pips on the 1 minute chart. That 36 pips is not even a 4 hour candle. The problem is these prop firms have everybody focusing on rules that don't necessarily fit their models, that fit your models. Right. So you may have a valid model, you may have something that works for you, but it doesn't satisfy the prop environment. And so now, you think you're a big fat loser. And in reality, it's because they have unrealistic rules. It's not always 5% drawdown. It's nice, it's awesome, but in real life, you're in control. Right? You are in control. Yeah, if you're doing something like this for a prop, cut everything in half. All right. At least you're going to be able to survive.
It's 11 a.m. Eastern Time. We expect comments from ECB's McClue, who speaks in Dublin.
This was supposed to have come over here. The gap is kind of unwelcome. I've been dealing with this gap now since the open, right? I had the hedge and the gap jumped over it. We saw that on Monday's video. And so now I've been dealing down here while managing the stuff up top. Hedging is not the solution. All right, are we bouncing here? That green line is the 61% retracement. And we have about 7 minutes to the London fix. Yeah, the drawdown is for real. Like this is running away in the wrong direction, clearly, right? That green line is moving in the wrong direction, right? There is a limit to how much I'm willing to let that go. And it's only been 2 days, right? This is not an abnormal environment. It's not like I got taken out by some black swan, except for that. Well, except for that, the gap was unwelcome. That's definitely a fact. Like this back here, this right here, that screwed me over, right? They jumped, the gap jumped over my hedge and closed the hedge at the same time because of the spread. Right. So I've been kind of screwed ever since this. But that's okay. It learn to deal with the unexpected. That's kind of the name of the game here. Right? Have alternatives for everything. You have to create your own rules. I'm just telling you what works for me. It's my psychology driving the bus, right? I'm just giving you guidelines. I use what I use. You guys figure out what works for you. You don't have my money. I don't have your money. I don't have your upbringing, and you don't have my upbringing. You have no idea why I need this money for, and you have no idea what I can do or cannot do with this, right? You have to figure it out for yourself. I'm just giving you guidelines. Oh, for sure. Absolutely. All this stuff, the election in Europe, you know, and all this kind of mayhem is what we learn to deal with. And that's why you have to have an exit strategy and you have to have a max loss. You have to have all these rules. You have to have guidelines to show you the way because your brain is going 100 miles an hour from one shoulder to the other shoulder. It's going left and right, bouncing back and forth, right? We're 1 minute we're full of testosterone, and the next minute we're full of anxiety, we're full of, cortisol and all that other crap. You just got to learn to back off, take small, tiny little bites and understand when the big picture is changing.
11 a.m. Eastern Time, we expect comments from ECB's McClure, who speaks in Dublin.
It's the big picture that tends to screw everybody because we're so hyper focused on the minute by minute by minute by minute by minute. And so if you have this idea that, hey, you might still be right in the end, how many times have you booked a loss only to have it turn around and go your way? right? That's kind of what I'm allowing myself to do here. Yeah, it's the problem is with our perception, right? We want to make money so badly that we have this hubris, we have ego, we have all these issues that impede this progress. And the best way I found is to approach this with bite-size trades from the bigger picture, right? So I'm looking at the daily chart, but I'm making 3 pips at a time. All right, I'll buy right there. Now I have 1, 2, 3, 4, 5 if you count this one up at the top. And then I think I had 4 in the upper box. 1, 2, 3, 4. Yeah. All right, 61% is still holding us up. Right, you have to remember, control the number of clicks. And so if you make the clicks as small size as possible, they have as much space as possible. Right? I'm trading 0.06s in the $14,000 account. Each click can have a couple of percent of space. That's kind of how we think. You have to have this environment that you're willing to operate within. And in that environment, break it up into manageable chunks, 1% per box, 0.25% per trade, whatever it is. If you're putting 0.25% per trade and it's down 2%, it's time to close it.
Shortly expecting comments from ECB's McCloof.
Come on, McCloof. I'm going to turn off the orders so I don't have to stare at them.
ECB's McCloof says my concerns also include understanding climate change impacts on food prices and the path of fiscal policy in Europe. In the US to sell $70 billion in 4-week bills on June 13th to settle on June 18th. McCloof says the future rate decisions are not just all about wages. We need to keep a close eye on particular risks from global and European conflicts.
Whatever he's saying, I like it. Say more, say more. A little bit more would be nice. I can recycle right here, actually. Come on. Right, so as a group, we've had a bunch of winners. And as a lone trader, I'm in drawdown, waiting to fix it. All right, my drawdown limit is down here. 680. 680, right around here. According to my mats. Microscopic trades in the biggest account that you can, right? Keep that in mind. If you're trading futures, trade $100,000 with micros. It's difficult to blow up that way. And same thing here, trading Forex. Put as much money as you can and trade the smallest size that you can. That gives you space. Just repeat the process. 1, 2, 3. I have 1, 2, 3. I have them all back in. I'm just waiting to see if we get paid again. We knew yesterday we might be scraping the bottom down here. Let's see what comes of this. This doesn't belong there. This does not belong there. What a slow day. 20 more minutes. Yeah, don't look for structured uh, rules. Like the rules are to save you from you, right? They're not to make perfect trades. It's a very different idea, right? That we have to understand that we're setting the stage for the probability of success, and then we have to manage those trades that are not successful, right? So you have to split that personality into two, right? You have to do the job on the front end that sets up the stage, and then on the back end you have to deal with the losers. It's where this that's where the plans, the alternatives, that's where the psychology really comes in. This attitude of a lion sort of thing. You're not going to quit so easily. It's all because it jumped over my thing here. What you call it? My hedge. Right. I screwed myself, not planning for a gap. Yeah, trading your own account is always the best way to learn. Get the skills, get your plans figured out, get your rules figured out, get your psychology figured out, get a track record you can believe in, and then adjust to play by their rules. All right. Don't assume you can trade $250,000 without the skills. There we are. Continue in that fashion. A couple more boxes. Pull back, pull back, pull back, pull back, pull back. If you can take a trade right around here, go for it. Well, we're still above the 61% retracement. If you're trading with a 36 pip stop, you got lots of space. The gap interfered with my plan. I made that entry in my journal. Now I know. 20 minutes or so, and I gotta go. Tomorrow is a big day for us. Big calendar. Should be eventful. We may yet find our way down here still. You have to understand what your own limits are. If you can't take it, don't go there. If you don't think we're coming back up here, don't allow yourself to go there. Don't follow me. Just do your own thing. And when we're looking at that really great big picture, you're trying to read, Jerome Powell's mind, right? We're trying to read Christine Lagarde's mind. Because we have euro on one side, and the euro itself has buyers and sellers. We have USD on the other side. It has buyers and sellers. The aggregate is a mean reverting instrument. Right? We're looking for the average price. We don't read minds. That's the problem. They're adjusting based on data. On this time frame, this is all speculating. That'll be a good time for a bounce. There you go. A little bit of hopeful thinking. Yeah. Baby size trades. That took me forever to kind of commit to. And then by spreading them, you gain control back. And you choose where this is right there. I'm just looking forward to tomorrow. The calendar looks fantastic.
Fed bids for 52-week bills total $983.7 million.
And tomorrow, it's all about us. Fed, FOMC, bunch of speakers, CPI. It's all about us. Should be a blast for sure. And maybe I lose. Yeah. Where you go? Maybe I don't close the gap. We will see. where do we go next? Do we go down, break below 61% and go find 76? Or do we bounce and keep going sideways and maybe go up? I'm thinking the bounce into tomorrow is more likely. But you know, I've been known to be wrong. It's not listening to my wishes. Come on, listen to my wishes. We're still testing 61%, right? It's been a non-event all morning. Wonder how many people are falling into the trap. We have one here. We have them everywhere. Oh, they are listening to my wishes. Maybe I should make it fatter, make it bigger. Yeah, you don't want to be paranoid if you're a trader. You want to be relaxed, you know. Throw on some classical music. Sometimes I'm too relaxed. Another 10 minutes or so. And I got to run.
At 11:30 a.m. Eastern Time, the US sells $46 billion in 52-week bills. Prior high yield 4.895% and a prior bid cover of 3.
Getting away on a technicality. I guess you can call it that. Not much of a turnaround Tuesday. It's still early. All it takes is one good trade. Yeah, I suppose. One bad one ruin a 20-year career. The risk of ruin. My behavior in the last couple of days, because we jumped over my hedge over here, right? This right there invited the risk of ruin. Right? This protection that I had was supposed to be up here. Right? I was supposed to hedge with a 10 pip stop on the hedge. And instead, we gapped down, triggered the hedge, and the spread stopped me out. And so that's been a problem for 2 days, like basically since the open. Right. So that's this kind of event that you have to learn from, figure out how to come out of this mess. Expect the unexpected and learn to deal with it. And that's why people feel like they're targeted sometimes. Why did they do this to me? They did this to everybody, not just me. I'm the one that put a pending order. And the market's job is to fill pending orders. I told it to use a limit, and it did. It's all good. No need to panic. I can see why people are stressed out about this. If they need this money to pay rent or buy groceries and that kind of stuff, it definitely raises the level of anxiety. Every loss is taking, food out of your mouth. Who'd want to trade like that? If you're operating in that mindset right now, back away. This is not for you. Right? You have to be willing and able to think clearly.
At 11:30 a.m. Eastern Time, the US sells $46 billion in 52-week bills, prior high yield 4.895%, and a prior bid cover of 3.
So the willingness to continue to fight, a couple days, even while I'm in trouble. And this cost me $156. And I think I made half of that back yesterday. And I'm pretty sure I made the other half of that right now. But I'm still responsible for this. Right? And I still trying to move that in my favor. Right? Every time I take a trade down here, it pulls this down. Every time I close a trade, it goes back up. And so as long as I keep recycling and recycling and recycling and recycling, I can keep this within reach. This got away. This clearly got away because of the gap. Okay? So I structured things. I'm targeting closing the gap first and foremost, hence break even. Right. So if we close the gap, I'm in the clear. I was not planning on the gap. Bottom of the hour is approaching. I have to let you guys go. Take care of my meds. So plan of action, don't do anything, right? Continue to recycle the trades if you feel like it. Otherwise, if you're compelled to walk away, don't touch your stops, don't touch your targets, just walk away. We've already agreed to this. We've agreed to the risk. We've agreed to the target. It's the timing that we have to adapt to. All right, I'll talk to you guys tomorrow, or I'll see you in the chat in the next few minutes. Bye-bye.